The other area that you should look at, if you have any sort of, let's say you have random companies, stocks in your portfolio, how do you assess if it's a good investment or not? Look at some signs. If the promoters are buying in the open market because the prices have come down, that generally states that the stock is cheaper and that the promoters see value in the company since they are buying. Then there's companies with high terminal value. Now when I say terminal value, look at companies that you think will survive for the 10, 20, 30 years. Major blue chip companies in this market will have a high terminal value. So we can say that if a company that is relatively cheaper in the market will have a high terminal value. Now when I say terminal value, it just means that it represents worth of an asset or the cash flow that is beyond a specific period. Usually in DCF, like a discounted cash flow model, we consider 10 years. So anything beyond 10 years is considered as terminal value. So look for the companies that have high terminal value. Like you'll have to do some research on this because like it's not a simple thing to explain. So if you want me to cover this terminal value, please leave a comment. I'll do a separate video on terminal value. The other way to look at it is like look for companies that have not crashed much. Let's say the market corrected 20%. If your company has corrected 10%, so that just says simply that it's a good company. One area that I would recommend investors is don't try to be a contrarian investor in this market because we don't know what's going to happen to the tariffs. We don't know what's going to happen to Indian markets tomorrow if there's some sort of unforeseen situation coming up. So stick to domestic markets, stick to companies where there is a lot of visibility in terms of their future earnings, at least for the next 2 quarters. Like don't go beyond 3 quarters, 3-4 quarters. Look for at least 2-3 quarters and like make an assessment of how things will look